Yeah, the hardest thing for agents to do sometimes is to pivot to a different product. And what I mean by that is we sell IULs based off of benefits alone. And that really helps in the pivot process. You know, if let's say something came up in the application later on and you knew they weren't going to qualify for the IUL after that question, then you have to pivot to a different product. Or maybe they got a decline. Maybe you thought, they were going to get approved and something popped up in their MIB that nobody knew about or forgot about or whatever, and they get a decline. So what I mean by we sell the IULs based off of benefits is our clients never see an illustration. We never speak about cash accumulation or retirement or anything like that with our clients. So in my ad on Facebook, what our clients see is, the video of me talking about how we protect drivers and their income. So what we tell everybody is my main goal is to make sure that you have access to money no matter what. So this is what we're going to do for you. We're going to put together a package with a death benefit. That way you have some life insurance, living benefits. That way, if God forbid something happens to you, you come down with your, critical, chronic, or terminal illness, stroke, heart attack, cancer, and what have you, you're going to have access to money. And then also the third part of the policy is that it's going to come with a savings account. And what that means is a portion of your monthly premiums that you pay in goes into that cash account, and you can use that money for whatever you want. It does take a couple years for it to build up where it's nice and usable, but you can have access to that money for whatever you need it for. There doesn't have to be an injury or health issue. A lot of my drivers like it because they know at any time their truck can break down and it could cost, 10, 15 grand to get the truck out of the shop. So if you have that money built up in that cash account, you can borrow that money from that cash account without having to take out an additional loan or, borrow money from family or whatever, drain your savings account. So that's kind of how we sell the IUL. It's strictly based off of benefits. We sell it like it's a package. And I mean, it is a package and it's a great package. I think it's a great product. But like I said, we're going to set you up with death benefit, living benefits, and a cash account. So when you're selling it by the benefits alone, that makes it a whole lot easier to pivot when something comes up. So if you're selling somebody on an amount of coverage, like somebody is dead set on, I want $1 million in coverage, and something comes up and you have to pivot, and you know that I know these people wanted $1 million, but now the only thing they're going to qualify for is final expense because they had a stent put in or something like that. So that's a hard transition when you're trying to get somebody from $1 million in coverage. Now you're telling them they only qualify for 40 or 50 grand. That's a tough sell. But for us, like I said, we do it on benefits alone. So once we've kind of pitched our pitch and we figure out that that's not going to work, it's easier to transition. Let's say you haven't even talked about how much coverage you can get them or anything like that. Once you're going through the app process, your pre-qual questions. Let's say you're going through your pre-qual questions and you find out that they had a heart attack or a stroke or whatever. Man, they're only going to qualify for final expense. A lot of agents think that's a downgrade. They're like, oh my gosh, I'm trying to sell these people an IUL and they don't qualify for it. Now I'm going to have to sell them a final expense policy and it's super expensive. It's a whole lot less coverage. Well, the client doesn't know that. The client doesn't know that they're having to get less coverage for, a whole lot more money. So it's all about the way you package it up and how you start it from the beginning. If you're just selling based on benefits, you're just trying to get them benefits. So you have to have a health license, first of all, to be able to really put a package together like this. So what we do is if we know if somebody is only going to qualify for a final expense policy because they got something crazy going on, and they're not going to qualify for a hospital indemnity either because they got something crazy going on. What we do is our pivot is Aetna. So we'll go with Aetna, try to get them 50,000, depending on how old they are, and what their affordability is. But what we do is we'll take that Aetna, and a lot of times we'll package it depending on which state the client is in. Foresters has a product called the Prep 2, Prepared 2. We call it the Prep 2, and it's not available in all states, but it comes with $500,000 in accidental death insurance. It comes with up to $2,000 a month in accidental disability, and it can also come with a return of premium. So when you know this, it's not a downgrade. It still sounds like a fantastic package. So you tell your client, hey, this is what we're going to do. We're going to get you locked in with some whole life coverage. It's never gonna expire. It's not gonna run out in 20 or 30 years. This is gonna last you until you die. And then on top of that, it's gonna come with a $500,000 in accidental death, and then also $2,000 a month in accidental disability. And it does come with the living benefits, like I was talking about earlier. You know, a terminal illness. If you're diagnosed with a terminal illness, you can get cash advanced to you from the death benefit. And also, it does build the cash value, like we talked about earlier. So, at any time, if you need to borrow from that cash value, you can borrow from that. So, based on those benefits alone, does this sound like something that would benefit you? Yes, that sounds great. Perfect. So what you're going to do next is you're going to build a package. You're still going to give three options. So you're going to, start at like 50,000 on the whole life, 40 and 30, or, maybe 50, 30 and 15, however you want to do it. And then three packages also with the accidental death. But don't tell the client that it's two different companies, two different things that you're putting together. Sell it like it's all the same thing. So you already told them all the benefits. Don't tell them it's two different companies and all that stuff because people are like, I don't want to do that. But if you sell it based off of the benefits and give them three options, they're going to pick one. I mean, it's that simple. They're going to pick one. If this is the coverage that they wanted, they know they're going to get a death benefit, a living benefit, cash value, accidental death, disability. Like you just hooked them up with this tremendous package. That's going to be a done deal. Now you just got to find something in their budget. So show them three different options, and put that together for them. So another thing that's also hard is when you've already pitched somebody on the IUL, and I'm not saying they know it's an IUL, but let's say you've already pitched somebody on, $300,000 in coverage. They've already picked it. They're like, I want the biggest package, $300,000 in coverage, the living benefits, the cash value, and then something comes up later on. So they already know they're in this for 300,000. That's what they want. And let's say you get further into the application and something comes up, like, oh man, either you forgot to ask or they forgot and they're like, oh, I forgot to mention, yeah, I had an EKG ran or something a while back. Turned out it was anxiety. Something like that comes up and you have to pivot. Like, oh, well, it's major enough that you're not going to, qualify for the IUL. You have to in your mind do the same thing that I just said. Let's pivot to a final expense, put them a package together, and if it's nothing major, you can, do a final expense policy with a hospital indemnity. That way it pays for hospitalization, pays for ambulance rides, pays for medical expenses, pays for cancer benefits. I mean, you're trying to put them a package together that is full of benefits. You're always trying to add value. Because if you just pivot to a final expense and that's it, after you've already sold them on the IUL with the living benefits and the cash account, and they're like, oh, well, thanks for being honest with me. And I'm glad you brought this up, but you're not going to qualify for the IUL now. Now we're going to have to do a final expense. You're going to get 30,000 in coverage. They don't want that. They don't want to hear that. First of all, they don't want to hear that they're declined or they're not going to get what they wanted. So don't put that negative vibe out there. Tell the client, say, hey, based off of, the answer that you gave me, I appreciate you being honest with me, but we are going to have to pivot now. You know, so this company's not gonna go for that little heart issue or whatever it was. So this is what we're gonna do. I'm a broker. I can still put a fantastic package together for you. Don't worry about that. I can get 99% of people coverage. but this is what we're going to do. Bear with me a second. I'm going to pull a few different packages up for you. And you do the same thing. You do a final expense with a hospital indemnity, or do a final expense with an accidental, because you still want to add the value. That's where it's at. You have to add value to the policy. Because if you're downgrading, which, a lot of agents, that's what they get stuck in their mind. They're like, we're downgrading. No, you're not downgrading. Just because the client can't get what you talked about doesn't mean it's a downgrade. I mean, they have no coverage. So anything to them is an upgrade. So I just wanted to share that little tidbit with you guys this morning of kind of how we pivot to a different product if, the, either they get a decline and you have to pivot, or you learn early on in the pre-qual process. You're asking the few questions to kind of see where you're going to go. If you find out early on and you're having to pivot, it's not near as hard, because mentally, even for you, you didn't already soft sell them on something bigger. So I hope this really helps somebody, because a lot of agents struggle with this, and we have taught a lot of agents how to do this and how to do it smoothly and not tell people they're declined, not tell people, you don't ever want to give anybody bad news. Just say, hey, it looks like they're not going to accept this. So we're going to pivot and go this route. Don't ever tell somebody, oh, you got declined. Oh, you can't have that coverage. I'm sorry, you can't get that. The client does not want to hear that. So, uh, put your package together and just smoothly transition to it. Tell them we're still going to put a fantastic package together for you. I'm good at what I do. I promise I'm going to help you out. So, guys, if this helped you at all, please give me a like, subscribe to my channel, share it if you want to. Um, I try to, bring as much value as possible, and I want people to learn how to help their client as much as possible. So I hope this helps somebody out there today, and you guys have a killer day. Go out there and crush it.